So you've probably noticed the housing market lately, and it's like prices are on a roller coaster that only goes up. Even with the interest rates climbing and people talking about a potential recession, the value of homes in the United States have shot up an unbelievable amount of $2 trillion. A recent report by Redfin showed that in just the last year, the total worth of all the homes in the entire country increased by 5%, which is the biggest jump we've seen in nearly a year. So regardless if you're in California, Washington State, Texas, New York, Florida, home prices all over the country are continuing to climb. This has got a lot of folks scratching their heads wondering just how much more expensive houses can get and which places are seeing the most amount of growth. What's up guys, my name is Casey McEwen and I'm a licensed real estate agent in the Dallas-Fort Worth area as well as the Orlando, Florida market. And in today's video, we're going to be discussing the housing crash, which will eventually happen. But before we get into today's video, if you guys are finding the content on this channel useful, please give me a like, subscribe, and turn on the notifications to always be notified when I release another video. With the year 2024 shaping up to be a key moment for real estate, let's dive deep into what exactly is happening, how it affects you, and what moves you may want to consider making, whether or not you're actually thinking of buying a house, selling a house, or just watching the drama unfold from the sidelines. Now, first things first, let's talk about why the housing market's total value ballooned by $2 trillion is such a big deal. Now, over the past 2 years, we've seen an overall increase of north of 13%, which is absolutely insane. But what's causing this exact surge? It actually turns out we're in the midst of a perfect storm of factors. A major reason for the hike in home values is the simple fact that there just aren't enough houses for sale. Many homeowners are hanging on to their properties right now because they've locked in ridiculously low interest rates. And I think we can all agree if you bought a house somewhere in the 2020 to 2022 kind of time frame, you're likely holding on to your house unless your life has kind of pushed you into a position where you absolutely have to sell. To give you an idea, Goldman Sachs found that almost all homeowners currently have a mortgage rate that's lower than what you'd actually get if you try to buy a house right now. Specifically, a huge chunk of these rates are all under 5%, with a good portion even between 2.5% to 4%. This means that for a lot of people, selling their home and buying a new one would mean taking on a much higher interest rate, which no one wants to do. Now, in cities like Chicago, Atlanta, LA, and Washington, D.C., the reluctance to sell is even more pronounced among those lucky enough to have a mortgage rate below 3.5%. Compared to those rates above 3.5%, they're significantly less likely to list their homes. It's gotten to the point where for the monthly payment on a home to stay the same as it would be with a 3% interest rate, home prices would need to plummet by a 35% clip to match today's rate of 7%. Basically, for many homeowners, selling now just doesn't make true financial sense. And to be honest with you guys, a lot of people are taking advantage of alternative routes. Like, I'll be honest with you, my primary residence home that I bought in 2020, I've mentioned it before on this channel, I am sitting at below 2%. Now, granted, it is a 15-year note, and I have a good friend that is a mortgage broker, so my interest rate on this house, and I've owned it for going on close to 4 years now, is at 1.875%. Basically free money at this point, guys. I'm never gonna sell this house. It's always going to be a rental. Within 15 years, it's gonna be paid off and be a completely cash flowing rental. But I do have a significant amount of equity in this house, and I'm actually going to be next week taking out an entire HELOC on the equity that I have to the tune of $350,000 and using that to purchase my next property. Now, yes, the downside is HELOCs are at that 7, 8, 9% interest rate, but I'm at 7, 8, or 9% at only the money that I take out, versus if I were to take out a $1 million loan for a house, I'd be incurring a 7 or 8% interest rate right now on a mortgage for that entire amount. On a HELOC, I'm only gonna be paying that interest on the actual amount of cash that I withdraw. Now, on the flip side, if you have watched my channel, you're also aware of the fact that there was 2 properties in 2023 that I bought. I bought a single family long-term rental in Florida that's sitting just a little above 7%. And I also have a short-term rental up in Oklahoma. It's a luxury cabin that is just a little bit below 8%. So as much as it hurts to purchase a home right now with where rates are at, if it makes sense for you or whoever it may be, such as myself, if it makes sense financially, go ahead and do it. But for a lot of people, when we're just talking primary houses, it doesn't make a lot of sense to be selling a house in order to escalate yourself up to that 7 to 8% range. But what would it take for the housing market to cool off? Some experts think if mortgage rates could maybe drop to about 5.5%, it might encourage more people to buy. However, it's anyone's guess when or if that will actually happen. Now, being in the real estate industry myself, it's something that I follow on a monthly basis. We're talking the job report at the beginning of every single month. Now, I actually made a recent joke on Facebook saying, hey, I know everything that is constituting interest rates going up or down, but I also know absolutely nothing. Let's use January, for example, that had an incredibly high amount of individuals that got employment, or the job report came back essentially double what was expected, meaning the economy needs to be bad or people need to lose their job in order for rates to come down. Now, if rates do come down, it essentially says, hey, we have a rough economy or we're in a recession, which is also what we're trying to avoid. So it's like we're trying to avoid a recession, but we're also trying to lower rates. So it's a lot of different moving factors in here that at the end of the day, we're just kind of sitting on the sidelines, kind of just waiting every single month to find out if inflation is coming down to that 2% threshold that the Fed continues to talk about. Once we hit that 2% threshold, then we will see rate cuts. If we see rate cuts, we'll see obviously mortgage rates start to fall, but also all the individuals that have taken out HELOCs, including myself, effectively next week, the interest rates on HELOCs will also adjust down. But now let's talk about the biggest price jump and who's winning in this real estate market. Interestingly enough, the suburbs are making a major comeback, with city living becoming essentially less appealing due to high prices and the rise of remote work. Even with some people returning to the office, the flexibility to work from home means that more folks are choosing to live where they get more bang for their buck. And this is certainly something that is rampant in the Dallas-Fort Worth market. There's a lot of desirability to being downtown, but with traffic and the incredibly high prices of downtown, as well as the very, very small lots that you get, a lot of people are moving further and further out to ultimately get more house for their money. And even then, you got people in the suburbs that are essentially moving out to very rural areas to again push their money further, because the home prices and tax values of homes in the suburbs are pushing them even further out. On top of this, home builders are ramping up construction to fill the gap caused by the housing shortage. New homes are a big part of the market right now, which hasn't always been the case. Now, this shift is essentially pushing the entire new construction industry to speed things up, with new building projects seeing a significant uptick from last year. But here's where it gets really interesting, guys. Warren Buffett, one of the most successful investors ever, seems to have sold all of his major stakes in US home builders like D.R. Horton, Lennar, and NVR. These companies are big players in the single-family home construction game, and Buffett's move kind of raises a lot of eyebrows. Did he see something coming that the rest of us are kind of missing? The road ahead for the housing market is filled with a lot of unknowns, but by keeping a close eye on the trends and making smart, informed decisions, you can navigate it successfully. Now, me myself, I have certainly kind of over-invested since I started investing about 7 years ago. That's when I got my real estate license and started building my portfolio. I'm very, very happy with where my portfolio is now, and I'm not rushing to buy that next property. Now, I mentioned earlier in this video, I am taking out a HELOC. That HELOC is essentially what I'm going to leverage if an opportunity comes about to purchase a lot in the desirable area that I kind of want to settle down in. But other than that, this entire year in 2024 is going to be saving up as much money as I can, paying off any bad debt that I may have, and having a ton of reserves in the future. That way I can have plenty of cash on hand when it comes to better opportunities, but also so I can work on a little bit of diversification when it comes to just my overall portfolio. We're talking about 75 to 80% of my total net worth, which I am a firm believer in, but I also want to make sure that I have investments elsewhere as well. Now, regardless if a housing crash happens now, happens in the future, or happens inevitably anywhere in the next 10, 20, or 30 years, all of the properties that I've spent the last 7 years acquiring are properties that make sense financially, not just at that given moment, but financially for the inevitable future. All of the properties that I have, I'm intending on keeping long-term. I may leverage them at some point like I have in the past, sold them and upgraded to another property, but for the most part, I'm not buying any properties with the intent to hold for just a couple years or pushing my financial obligation a little bit too far and putting myself in a rough position, because at the end of the day, I am very happy with where I am financially, and there's no sense to kind of push myself above and beyond what I'm comfortable with, because truth be told, I'm 34 years old and can essentially retire in the next 5 years if I want to, and I want that opportunity moving forward, especially with a significant other and a family on the way. Thanks again for watching, guys. I would love to hear what your local real estate market is doing, whether or not it's just incredibly hot with this spring 2024 market full in effect, or if you're seeing an absolute slowdown. Make sure to leave a comment down in the comment section below. I'll make sure to reply to any and every comment posted. Thanks again for all the support, guys. Make sure to like and subscribe, and stay tuned for the next video.